Get more from TLDR by following TLDR EU on Instagram and Twitter for news updates and explainers that never make it to YouTube. Just search TLDR News EU. Today, we're going to take a look at Europe's current energy crisis by splitting this video into three parts. Firstly, we're going to take a look at how bad the European energy crisis is right now. Secondly, we're going to have a look at how bad it's expected to become. And thirdly, we're going to be going through some of the possible wider political and economic consequences. So, firstly, how bad are things right now? Well, honestly, pretty bad. Like the rest of the world, Europe is suffering from a shortage of natural gas, and to a lesser extent, coal. This is largely due to the fact that post-pandemic, demand has shot way ahead of supply, pushing prices sky high and forcing shortages around the world. Nonetheless, Europe has been especially affected for four reasons. Firstly, Europe had a particularly cold winter, which meant that people were heating their homes for longer than usual, depleting European natural gas supplies. Secondly, in accordance with their climate goals, European governments have been weaning themselves off fossil fuels. This has meant that Europe has had relatively little domestic gas or coal capacity. For example, Europe's top producer of natural gas, the Netherlands, began phasing out their main gas field in 2018. And in 2020, the EU production of hard coal was just 46 million tonnes, 80% less than the 277 million tonnes produced in 1990. Thirdly, Russia might be limiting its natural gas supplies to Europe. Russia provides about a third of Europe's natural gas, and it's been suggested that Russia is limiting its gas output to pressure the EU into approving its controversial Nord Stream 2 pipeline, which would run directly from Russia to Germany. It's true that Russian pipeline flows to Europe are lower than usual. In January to August, they totaled 99 BCM, nearly 20 BCM below the total flow during the same time period in 2019, representing a 17% drop. However, it's worth noting that Gazprom, Russia's national gas company, denies that they're doing this deliberately or for political reasons, blaming the lack of output on domestic Russian demand over the particularly cold winter. And at the time of writing, Gazprom is suggesting that it might increase output to Europe going forward. The fourth reason is that Europe's been slow to replace its limited pipeline capacity with liquefied natural gas sold on the international markets. This is a global supply crisis, but Asian and South American countries were the quickest off the mark, and therefore have substantially increased their LNG imports, whereas Europe's have steeply decreased. Anyway, these factors together explain why European natural gas prices have skyrocketed by over 600%, from about €20 per megawatt hour to nearly €150. Similarly, European coal prices have shot up by nearly 400%, from about $50 per metric ton to about $240. You get the point. Coal and natural gas prices have gone sky high, and unsurprisingly, this has had a similar effect on European energy prices, because coal and natural gas still account for 20% of all energy production in the EU. On Wednesday, European day-ahead prices were up by as much as 500% in some places, up from an average of €50 per megawatt to as high as 300 in Germany. So that's the situation right now. A global shortage of coal and natural gas has hit Europe especially hard, and that's pushing energy prices sky high. But let's move on to the second part of this video. How bad is it going to get? Well, the problem is that most of the causes of this crisis, the decarbonisation of Europe's energy production and the post-pandemic boom in demand, are relatively long-term issues and aren't expected to ease up anytime soon. This doesn't necessarily mean that gas or energy prices will stay at the parabolic highs we're currently seeing. It's likely that some of those extremely high prices were driven by speculation and fear of future shortages, and should die down over the coming months. But regardless, the prices will continue to be higher than usual. After all, European gas storage levels are at the lowest they've been in about 10 years, which means that European demand is likely to stay high, and therefore keep prices high over the coming winter. and a lot will depend on how cold that coming winter is. If it's as cold as last year, then things could get really ropey. So that's the long and short of it. Europe has been particularly affected by this global crisis, and is expected to continue all the way into winter. Now for the third part of our video, the wider economic and political implications. Perhaps the most important political aspect of the crisis right now is how it will affect energy cooperation in Europe. Basically, at the moment, the Europeans' common energy market harmonises prices across the continent, so that European states pay similar prices for their energy. This requires European states to essentially share their energy resources, which everyone's happy to do when there's a lot going round, but is less keen on when supplies are limited, as they are right now. Both France and Spain have already expressed their dissatisfaction with the current system, and are expected to raise this issue with the European Commission. If things get really bad over the winter, it's possible that EU states will simply refuse to share their electricity with one another. For example, France, which is powered mostly by nuclear power, is currently exporting a massive 10 gigawatts worth of energy to other European countries, like Germany and Italy, despite historic domestic energy prices in their country. And if they wanted to reduce their energy costs, they could just cut off other countries. But this would push their costs even higher. Something similar happened between France and the UK this week, when France threatened to shut off its energy supply to Jersey and the UK if the UK continued to violate the Brexit deal. This just goes to show, as energy supplies become more limited, energy sharing becomes more political. So that's the politics of the energy crisis. It basically puts a strain on energy sharing agreements. But what about economics? Well, the main worry is about inflation. Because we need energy for, well, just about everything. We need energy to keep our lights on, heat our houses, even fuel our factories. If the cost of energy goes up, then, well, the cost of basically everything else goes up too. Now, we're not going to go into too much detail here, because we did a whole video about it over on our TLDR Global channel, but basically, too much inflation isn't good, because it makes goods more expensive, and then people can't buy as much stuff, which essentially makes them poorer. European governments will try to insulate voters from the worst of it, with the Spanish government already imposing a windfall tax on energy companies to subsidise domestic energy bills. The UK is also sticking with its energy price cap, and France is increasing benefits to low-income households. But this might become impossible if prices continue to increase across the board. Anyway, that's the EU's energy crisis. And as one final thing, some analysts have suggested that this crisis is a consequence of the EU's overly ambitious green agenda. While it's true that the EU's energy shortage has been exacerbated by a lack of domestic energy production, and energy prices probably wouldn't be so high today if the EU had kept open a few of its coal mines, this isn't an argument for reopening coal mines. Because if you're serious about solving climate change, this is an argument for even less dependence on coal and natural gas, so that you're insulated from wild spikes in their prices. Sure, Europe needs to improve its domestic energy production to avoid this sort of thing in the future, but not by reopening coal mines. Rather, if it wants to meet its climate targets, it needs to grow and stabilise its green energy production, both by reinvesting in renewables like solar and wind, but also in more reliable green energy like nuclear. But what do you think? Was the EU naive in transitioning to renewables so quickly? Or is this price volatility proof that green energy is both morally and economically optimal? Be sure to comment your thoughts down below. As I said at the start, you can also engage with us and get more from TLDR on Twitter and Instagram. Follow TLDR EU or go wild and follow all of the TLDR accounts by searching for TLDR News. Thanks for your support.